Hi, I'm Kate Stalter with a look at how to spot a follow-through day. How can you tell whether the market has gone back into a confirmed uptrend? The follow-through day is a proven way of making that call, and we get a lot of questions about this, so let's take a look. A quick definition of a follow-through day is when at least one of the major indexes, the Dow, S&P 500, NYSE Composite, or NASDAQ, rises approximately 1.7%. In some markets it's less, in some markets it's a little more, and you always want to see heavier volume than the previous session. This is a daily chart of the NASDAQ, and let's zero in on the summer of 2006. On July 18th, the index fell to a new price low, and that same day began rallying higher. So July 18th was day one of a rally attempt. And right here, there was a big price gain the very next day, and that came in heavier volume right there. However, that was too early to be a follow-through day. The follow-through generally happens anytime after day 4 of the rally attempt. Occasionally it happens on day 3, but absolutely no sooner than that. And the reason is because you can get false signals in the very early days of a rally attempt. It's common to see huge buying immediately after fresh lows, but if it's too soon, it's also common to see the index falling again, reaching another low. That's why you wait a few days. In fact, that almost happened. In this case, you see a sharp pullback right here. However, that previous low was not undercut, just barely. But that gives you a sense of what can happen and shows you why it's best to wait for the new uptrend to be confirmed. So in this case, the rally attempt that began on July 18th was still intact because that low was not undercut. So what you're looking for at this point is the day when you have a combination of big price gains and heavier volume than the previous session. So the rally attempt meandered along here for all these days in here without seeing that combination, and then right here on August 15th, 2006, you did have on the NASDAQ the combination of big price gains and heavier volume. And right there, you do see the volume for that day, and you notice it was indeed heavier than the previous session. That's all you need to see in terms of volume. And note that the volume does not need to be above average, it just needs to be heavier than the previous session to confirm the follow-through. So in this case, that August 15th, 2006 follow-through was 21 days after the rally attempt began back here. And for those of you who are more seasoned CanSlim investors, you might have heard shorter time spans mentioned in the past. But as IBD's research continues to evolve and now includes market data going back to the 1880s, we've found that successful follow-throughs can occur any time after day 4 of a rally attempt, as long as the previous low is not undercut. So after this follow-through day right here, you can see the successful market uptrend that happened. So this has been a very quick look at how the follow-through day occurs and what signals to look for. To wrap this up, I want to read you a quote from How to Make Money in Stocks by IBD founder Bill O'Neill. A follow-through signal doesn't mean you should rush out and buy with abandon. It just gives you the go-ahead to begin buying high-quality stocks with strong sales and earnings as they break out of sound price bases. Remember, no new bull market has ever started without a strong price and volume follow-through confirmation. It pays to wait and listen to the market. One quick caveat, about a quarter of follow-through days will fizzle. But, as Bill O'Neill has noted there, you do need the follow-through to confirm a new bull rally. That's why it's so important. If you have any more questions about the follow-through or a new market uptrend, visit askibd.com and submit your questions there.